What's up, traders? Welcome back to Trades and Gains. And it looks like you guys aren't sick of my face yet because we're going to do a PayPal flow and net flow sentiment video. Now, what if I told you Wall Street was quietly loading up on PayPal ahead of earnings? We're seeing a massive spike in bullish options flow, and today we're decoding the data from net flow momentum to million-dollar trades that could tell us where PayPal is heading next. Let's go ahead, open it like some butt cheeks, and dive straight in. So starting with net flow, the balance of premiums between puts and calls, we've got a clear signal here. As of April 25th, the net call premiums spiked late in the session while net put premiums stayed relatively flat. That's bullish divergence to its finest, suggesting big money is quietly positioning a long trade. This aligns with PayPal's steady price rise into the $65 range, closing up nearly 1% on the day. More importantly, net call volume surged into the close, signaling aggressive bets into earnings that are due May 7th. Now, here's where it's going to get spicy. Let's go ahead and dive into Investor Central Club. And we can see here, first things first, we saw a $1 million trade on the 31st of March that is showing a June 18th expiration for the $75 calls. That is 1,200 contracts at the $795 spot for that average. Long dated conviction play with bullish delta exposure, and this was placed at the $64.07 spot. Now on February 27th, the 25th, as we can see down here, we saw the $75 puts being bought for $2.58 million spent in premiums, giving them 5,000 contracts at the $5.15 price. Now, this is protection, but now deep underwater, this is likely used as a hedge against a bigger trade. Now, as we can look up here, on April 9th and to the 10th, we've seen some short-dated calls bought for the June 20th, 2025 strike date. And we saw $70 calls and $60 calls all hitting the tape exactly. Now, are these tactical bets on post-earnings breakouts? One trader seems to think that is the case here. Now, we're seeing a combo of long-term bullish exposure via 2026 calls, tactical 1 to 2 month calls sizing in at high conviction, and mixed protective puts, but most likely older positions. That smells like bullish institutional positioning leading into earnings with defined risk. Our put to call ratio is sitting around 0.213, which is extremely call heavy. That's either dumb retail or smart money expecting upside. Earnings hits on May 7th, and implied volatility is ticking higher, but still moderate, around 34% to 48% depending on strike and date. That means options are still cheap relative to the expected move. The key takeaway here is this is a textbook pre-earnings accumulation phase. The whales are nibbling, and if earnings beats, these plays could explode. So, is PayPal the stealth earnings winner? No one's watching. The flow is saying yes. Now it's on you. What's your plan? Drop a comment below. Bullish or bearish into May 7th? And if you want more whale flow breakdowns like this, smash that like button and make sure you subscribe so you never miss a Trades and Gains video.